I was hoping to be able to stand up today and say, well, in Australia we do it better, but alas, when putting together the material for this presentation, I realised that maybe you'll be able to learn from our mistakes instead. Which is, it hurts me as an Australian to say that. But as an initial thought, I want to think about what does it mean for the economy if employing or engaging someone is too uncertain, too complex, and too administratively costly. What does that actually mean for our economy if that's too uncertain and too costly to do? And also, one of particular interests of mine is the small businesses. Australia is like many other jurisdictions where small businesses account for a large amount of the GDP, about a third. They account for a large percentage of private employment, about 40% of private employment. But they face certain issues. And so, particularly when you look at the issues that small businesses face in terms of compliance costs being regressive, the complexity of regulation, it's really important for us to reflect upon, well, how does employment or engaging someone by small business, how does that affect them, and how could that be adverse or beneficial to the economy? And even though coal mining is not all what Australia is about, actually the services industry accounts for 80% of our GDP and about 86% of employment. Our third biggest exporter is education. And so it's really important, I think, as a jurisdiction to reflect on what is really our innate strengths and what is really driving our economy, because that can affect this discussion about the employment-contractor relationship. So the next couple of slides, I'm just going to step through what we do in terms of Australia, in terms of if we employ someone or someone's a contract, just to step it out. And hopefully this makes sense. So if we have an employer and we have someone who is regarded as an employee, then that employee, their wages are assessed at individual marginal tax rates, which is the first $18,200 is tax-free, then 19% for the amount up to $37,000, and then 32%, and then 37%, and then once you reach $180,000 taxable income, which is successful income less deductions, then you have the highest marginal tax rate, 47%, which is the equivalent of about £105,000. As individuals, we're also liable for a Medicare levy. Now this levy is essentially earmarked to fund our public health system. And so essentially all individuals make this contribution once your taxable income is over about $23,000. If you're under $23,000, then you don't have to pay the Medicare levy. If you're an employee, you're able to claim work-related deductions. Okay, so we still have employees being able to claim work-related deductions. One of the earlier speakers made a point about investing in your own capital, about education. But some education can be deductible if it relates to your current position. But if you're studying for a future job or a future aspirational, those educational expenses aren't deductible. Employees are not assessed on fringe benefits in Australia. So if you get benefits from your employer, that's not your problem. That's your employer problem. Although you might have a reportable fringe benefit amount, which is basically to be eligible for some government subsidies and that, they take into account your overall wealth, which is your taxable income plus your reportable fringe benefit amount. Basically puts it in a pre-tax wage equivalent to see how really rich you were for that year. We're not assessed on superannuation contributions. That's essentially employers in Australia have a mandatory obligation to pay superannuation, which is basically employment contribution, to a superannuation fund, which is a retirement fund on our behalf. But the employee, we're not assessed on that 9.5%. If you're the employer, then you're liable for the superannuation guarantee. So that's so on top of that's basically 9.5% of the wage figure, and the employer has to pay that to a superannuation fund, a retirement fund. Also, if they provide fringe benefits, they're liable for fringe benefits tax, which is essentially calculated at the highest marginal tax rate plus Medicare levy, so 49% currently. In addition, in Australia, we've got federal government, the Commonwealth government, and we also got state governments. State governments levy a payroll tax on wages, employee wages essentially, and it has thresholds, generally around about $1 million of wages, and then the employer is liable for payroll tax. It's generally about 5 to 7%, depending what state you're in. In addition, the employers can be liable for work cover insurance. Basically, this is an insurance policy to cover injuries to your employees. So if your employee has an injury, then they can actually be covered by this work cover. And so the employer has to pay that. The amount depends on what industry, how risky it is, also how good is your safety record. And that can be generally around 5%, but it could be up to 15%. Also, you'd be liable for annual leave, sick leave, public holidays. We have 13 public holidays in Australia, and then maybe long service leave and maternity leave. So roundabout, that can be 25 to 28% on cost. So for an employer, the cost is not just the wages to the employee, but essentially that now 25% on cost. And that's in terms of tax, but then you've got all these administrative obligations as well. So PAYG withholding, so every fortnight when I get paid, employer withholds a certain amount, and that goes to the tax office. And that's incredibly important for the Australian tax revenue because it basically, as a tax administration function, guarantees a large amount of the tax collected for the government. Because as an employee, the tax is already getting prepaid for me. So really, there's not much chance for tax avoidance in that regard. Also, they're liable to do the superannuation payments every quarter and report on that. You've got your wages and conditions under your Fair Work Act in terms of your employees, workplace health and safety, non-discrimination, and record keeping. So essentially, they're your legal and tax obligations for employing someone in Australia. Okay, if you have a contractor, so we've got a business contractor, well that person or that MD needs an Australian business number. Also, you may need to be GST, VAT registered. Our threshold for that is 75,000, which is about £45,000. In terms of, we had a recent case in terms of Uber. In Australia, for GST, all taxis must be GST registered. If you're a taxi driver, you must be GST registered regardless of the threshold. And the basic idea is that it gives price equivalence because if some taxi drivers were GST registered and others weren't, the fares would be different. And so essentially it was a level playing field. And so the issue for the court was an Uber driver taxi travel or limousine? And according to, they looked at the definition and they said, well, when you look at what's happening with Uber, clearly they are taxi travel. And so therefore are required to be GST registered. They also said a Honda Civic is not a limousine, because limousines are also apologies if you have a Honda Civic, it's not a limousine. And there's precedent to establish that. And also in terms of Airbnb, they're unlikely to need to be GST registered because in Australia, if you have residential rental supplies, they're input tax, which generally don't require to be GST registered. If you have an Airbnb where you're actually providing services like breakfast and those type of things, then that could be a commercial one, and then you may be required to be GST registered, but that requires a 75,000 threshold. So even if you had a commercial residential rental thing with your Airbnb, you're probably unlikely, that threshold becomes important about whether you're registered for GST or not. Okay, so if I'm running my own business as a contractor, I might be liable for GST, depends on the threshold. That's GST in Australia is 10%, and that's in a way locked in. For it to go up, you need agreement with the federal government and all state governments. Okay, and so we've seen arguments that it should go up to 15%, but there's never going to be very unlikely that will occur in the foreseeable future. If I'm a contractor and I'm an individual, a sole trader, then my business income will be just assessed at marginal tax rates, and so those different amounts, and also be liable for the Medicare levy. If I run my business through a corporation, then our company tax rate is currently 30%, but we have over the last couple of years introduced lower company tax rate for small companies, so 28.5%, and then in a couple of years' time, it will go down to 27.5% for small companies, and the threshold there is 10 million Australian dollars for that. If you're running a business as a partnership, then your partners will get taxed on the amounts, whether they're individuals or companies. If you're running a business through a trust, Australians, we actually use trusts also to run our businesses, and so generally it'll be the beneficiaries who are presently entitled to that income who will pay tax. Otherwise, it's the trustee but they get taxed at 49%. So the incentive in Australia is that to try to make sure the income is distributed out of that trust. Otherwise, penal rates of tax will apply. You know, so you'll be able to claim your business-related deductions. There's loss rules around that in terms of carrying forward losses. In terms of superannuation and retirement payments, if you're self-employed, it's optional that whether you do it or not. Okay? And if you do it, you can claim a deduction up to a certain amount, but it's not mandatory. For the business who's engaged as contractor, they're liable. Generally, super guarantee only applies to employees, and that's a common law definition. But then there's a statutory extension to say, well, certain other people will be deemed to be employees for superannuation, this retirement contribution. And one of the main ones, only if the contractor, an individual providing labour or paid to perform, like a musician. But if you engage someone who is a rigid contractor, they are a contractor, but they are providing labour as an individual, then they're deemed to be an employee for super guarantee purposes and they have to do it. And that, well, the business is liable for that. So the legislation is written that it's actually the business that will be liable to make this contribution. Potentially payroll tax. Again, payroll tax is normally just for employees, but if you have a contractor, an individual providing services, they're deemed to be an employee, and so then the business may be liable for payroll tax. Be able to claim GST input tax credit, which is a credible acquisition. Obligations for, so with PAG withholding, a contractor can ask the business to say, hey, can you withhold some tax from my payment and pay that to the tax, but that's optional. Mandatory if you don't. If you pay a business for work and they don't have an Australian business number, then it's mandatory for you to withhold 49% from that payment. They've recently introduced the unfair contracts for independent contractors, okay, to try essentially acknowledging that independent contractors are potentially being taken advantage of in terms of unfair contracts, and so there's provisions brought in for that. Still, you know, you've got workplace health and safety, non-discrimination, and still obligations for work, record keeping. So that's if you've got a contractor. I want to just go through, we've brought in 2000 tax provisions to deal with personal services income. And I know that it's similar in the UK where there was concerns about people setting up companies or trading through that to try to get access to the company tax rate rather than the individual marginal tax rate. So you might have a company, a trust, a partnership, or even a sole trader, and that's a proper contractor, a proper business, and it's providing personal services income. And currently, the ATO, the stats from, is about nearly $3 billion worth of personal service income flowing in Australia. This is what's been declared on the tax returns. And so you actually demonstrate there is a lot of money as personal services income in Australia. And it's defined in the legislation as reward for efforts and personal skill of an individual. So that, sometimes with law, it's better to know what's not personal services income. So it would not include selling goods. So if I'm running a hot dog business, that would not be personal services income because you're buying my hot dogs. Even though I have to cook them and do that, that's not, the main thing you're getting is the goods, so that would not be covered as personal services income. Will not include granting rights to intellectual property, that's not covered. Also will not include using income producing assets. So if you have like a tractor, we call that like a wet hire, even though you don't know how to, you need me to drive it, you're not paying really, even though that's skill, you're really paying for the tractor, not for my skill. And so that would not be personal services income. Also, it would not include businesses with substantial assets or employees. So if you've got a one-person accountant, that would be potentially personal services income. But if you had 20 accountants working together, they've actually got a business structure with substantial assets and employees. They would not be regarded as personal services income because they have substantial assets and employees, where a one-person show potentially would be. The ATOs recently have concerns with professional accountants and lawyers love to do tricky stuff with tax. And so the ATOs recently released a ruling saying, if you're part of a professional firm and you're not on average paying 30% tax, you're a person of interest. Legally, I'm not sure what brand they'll have on, but basically they're highlighting to accountants and lawyers, don't be too clever because you're a person of interest. So if you do have personal services income, you have to look firstly at the results test. and that says, is at least 75% of your personal service income produced to achieve a specified result. Are you paid to achieve a specified result? Compared to, are you getting paid by the hour? Also, do you supply your own plant and equipment? And are you liable to rectify? If you satisfy that, your structure works. You are a proper business, per se, and so for tax purposes, we'll respect your structure, your company, and just let the company pay tax on that personal service income. If not, you've got a fallback position, and it says, well, if less than 80% of your personal service income is from one source, and do you have unrelated clients? Do you have more than one client you're supplying to, and how are you advertising? Or do you at least employ someone else to do the principal work? Do you employ another accountant to do at least 20% of the principal work? Not just an admin person, but someone actually doing the work required for personal services? Or do you have business premises solely available for the occupation? If so, then your structure works. We're happy that you're a proper business, and so then your company will pay tax. Or you can go to the commissioner and say, oops, special circumstances, but if not, what will happen for Australia? So if you can't satisfy any of those tests, then all the income is attributed to the individual. All the personal income is attributed to the individual. Also, you're denied certain business deductions. And essentially what that's doing is treating you as an employee for tax purposes. Even though legally this company is there, we get our tax, gets this magic wand out and go bang. For tax purposes, that company doesn't exist. And essentially that person deemed in a way to be like an employee and has to do adjustments to their income and deductions. I'm mindful of the time, Glenn. I've got...
Yeah, you've got 3 minutes.
3 minutes. Employees not defined in the legislation, but so we fall back in the common law. One of the things we need to think about is what's the definition of a business? Because generally a lot of times in this legislation, a business excludes activity as an employee, defined personal services income. So I just want to race through employees not defined in the FPT. Again, it's common law, but it's then deemed to include like people like directors and that as religious practitioners, also employees association. GST legislation, we use the term enterprise rather than business, but an enterprise includes business, includes leasing, but excludes status as an employee. Superannuation, we use the term employee, which has a common law meaning, but then we extend it and say it includes these other people, particularly personal services income. Payroll tax, we have employee, but then we've got deemed employees again. Again, it uses that personal services income as well to extend it. And we've got work cover, uses the term worker, but then goes back to say it is an employee. Under the, but why use the one word when you can use another word just to get people confused? And this is why I'm saying we probably don't do it better than you guys. And then we've got the Fair Work Act, which includes, covers employees, but again, that's not defined, back to the common law. We have the Independent Contractors Act. That's not defined. It kind of says, well, it includes contracts for services, but it's not limited to individuals. And so the idea that if I'm an independent contractor and I've incorporated a company to trade through, you can still be covered by this Independent Contractors Act, even though you're not trading as a sole trader. The reasons for uncertainty, we've got, we've talked about protection of employees, tax administration ease, and that's the amount of money collected in terms of employee, about 182 billion. Employees as a sign of wealth, payroll tax, and tax arbitrage, because we generally treat capital income concessionally for tax purposes, and we tax human capital generally at the marginal tax rate, which generally has been higher than, say, the company tax rate. What I want to just reasons for uncertainty. There's a recent report by the Inspector General of Tax, and one of the recommendations was for a voluntary certification program. We have a tool, decision tool, by the tax office decision tool, but generally that's used by employers. It gives a little bit of protection to employers, but not used that much by employees. The Inspector General argued that we should have a voluntary certification system where both the employer and the employee contractor go to the tax office to try to determine exactly the status of their relationship at that time. Is it an employee status, or is it a contractor status? And the reason for that is that it gives you certainty going forward. Because we had a couple of cases where people were contractors for their whole working life. Something's happened, the contract's fallen over, and then basically say, oh, well, actually, for super purposes, I was an employee, and you owe me 20 years, or owed my super fund 20 years of unpaid super guarantee, and that's the employer or the engager's problem. So part of the Inspector General said we need to have some certification to make it clear. Unfortunately, the tax office didn't like that suggestion and said no, but it may go forward. I'll just put one thing up and end on this one. There was a study, and because there's a number of studies to say employing someone is a high part of compliance costs, particularly for small and medium businesses. And the Board of Taxation did a study and they said, look, in terms of issues for small businesses, tax is not really the big issue. It's all the other regulations, and they identify these. And there are all the regulations around employing someone. So I think it's important we use the employment relationship to protect employees, which is a good thing. We use the employment relationship to help tax administration, so the tax office gets tax revenue. But by doing that, we've added a lot of complexity to that status. And I wonder whether, to what extent is that good or bad for the economy. And I think it's important for us to reflect on how we've utilised that indicator for a lot of different things. And I'll leave it there. Thank you.